The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alistair McLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alistair McLeod on behalf of Gold Money, and with me on the line all the way from Santa Monica in California, I have Michael Maloney, who is of goldsilver.com. Welcome to the podcast, Mike.
It's great to be here.
Now, in the sort of little pre-chat I had, you expressed a huge interest in educating people about the importance of gold and silver. Tell me just a little bit about why you feel this is necessary.
Well, like I said, we're really an education company that funds the education because we give away all of our educational materials, everything that we can research and find out and know about monetary history and the global economy. We share, and most of that goes out at no charge. And so we're an education company that funds itself by the sale of precious metals. But what we're trying to do, there is a very real danger that, one of the things I was saying before we started was that there is a financial crisis headed straight towards us. There is no way of avoiding it. It will happen within this decade. And I said that very often when there is great monetary upheaval, there's great political change that goes along with it, and it's almost always for the worse. We were talking about the rise of Napoleon was due to a hyperinflation. There were two hyperinflations during the French Revolution. Nobody knew who Napoleon was. He distinguished himself by quelling some food riots in Paris. The riots were direct response to this hyperinflation.
And of course, and you also mentioned Hitler and so on. I mean, this is absolutely right. The two things go together, I think, like bread and butter, don't they? But sort of coming to the current situation. I mean, I find this really quite extraordinary because all the major paper currencies are coming to a crisis at the same time.
Yeah.
I mean, in America, you have. Money is just accelerating at a hyperbolic rate. That's the only way I can describe it.
Yeah, it's going to be $1 trillion a year, basically, and so every year they're going to print more currency than took 200 years to create.
Yes.
From the beginning of our country, the U.S., until the crisis of 2008. It took 200 years to go from no dollars in existence to 825 billion paper dollars.
Absolutely.
And now they're going to print 85 billion, coming up. Right now it's 40 billion a month. But once Operation Twist ends at the end of the year here, January, it's going to step up to about 85 billion, according to the San Francisco Federal Reserve governor. And that works out to just over $1 trillion a year. So.
But the extraordinary thing, Mike, it looks to me as if $1 trillion is not going to be enough. I think the amount of money that's required to stop the whole thing falling over is now looking like 200 billion a month.
They can try and stop it from falling over, and they can print the currency until it's completely worthless.
Yeah. Well, that's what else are they doing?
Mass exodus out of currency and into money.
Yeah,
and on that, it doesn't require Ben Bernanke printing us into a hyperinflation for gold to go to astronomical values. All it requires is a few really large investors. If a few billionaires decided that they were just going to convert all their assets to gold, and then other people starting to follow them.
Well, the trouble I have with that is that the gold isn't there. It's all disappeared off into the Far East, so far as I can see.
Yeah, and, people go into the ETFs and stuff like that, like Soros, I think he'll be pretty disappointed one day.
Well, in a sense, Mr. Soros, I think, even though I disagree with his understanding of economics, I would say that he is one very, very shrewd man. And, I would have thought that going into the GLD, which is adding to his position, might give some people a bit more comfort about GLD. Do you think that's sensible or completely wishful thinking?
Well, I think it does give people comfort with GLD. I just think that there will come a day, though, when doubt is cast on whether or not there's actually the gold to back it up. But simply the fact that you can short it means that GLD, you're not buying gold. You're buying a share in a fund that's where the bank is the trustee of it. And if the bank fails, you become a creditor of the bank. And even if they had the gold, you would be getting pennies on the dollar.
Yeah, no, I think that is certainly the big risk. And I'm interested you mentioning this shorting thing, because I think that's a bit bizarre that you can short an ETF, then you can destroy the shares which you have borrowed, so that those shares have to be recreated for the original owner to have his claim back.
It's amazing, isn't it?
To me, that is insecure. Quite simply.
If somebody supposedly owns gold with GLD, and the bank that's running it borrows shares out of GLD, and then they loan them to somebody who then sells them into the market shorting. Now two people own the same ounces of gold.
Yeah, exactly.
I've said, if it's not, you have to have something real that can't be, where it's not a paper claim on gold, because the precious metals markets are too highly leveraged. For everybody that actually owns an ounce of gold, there's like 100 people that think they own an ounce of gold.
Yeah, I know that is a serious concern, and it's a recipe for people running in the same direction at the same time and finding that there is actually none there. I'm particularly interested that the gold and silver seems to be moving from America every time the paper market pushes the price down. The physical seems to be going over to the east. Is this something that people are very much aware of in America, do you think, or am I just being paranoid?
Only the people in the industry seem to be aware of it. The public hasn't got a clue. This whole thing with printing $1 trillion a year says that there is a major emergency right in front of us, and Ben Bernanke is scared to death. And his only response to everything is to create more currency. That it's going to end badly. And with all the gold flowing to the east, we're going to wake up and find out that there isn't any here. And the people that actually do own gold and silver, that isn't a paper claim check on gold and silver, those people will find that their purchasing power has gone up astronomically. That was one of the things I talked about in the book. The differences between this precious metals bull market and the last precious metals bull market are mind-boggling. In the last precious metals bull market of the 70s, it was only North America and Western Europe that pushed the price of gold. There was the London Metals Exchange and the Commodities Exchange in the United States, and that's what sets the worldwide spot price. If you lived in the USSR, it was a state-run economy. There are no markets, and even if you could buy gold on the black market, it did not contribute to the price of gold ultimately. China under Mao, that was a very poor country at the time, even if it's part of their tradition. Still, if somebody could buy gold in China, it did not affect the worldwide spot price. Mexico, South America, most countries were quite poor at the time. Now there's billionaires in all those countries, and there's markets. And, like the Shanghai Stock Exchange, we've gone from a country that didn't have an investor in it, not one in the entire country. Same thing with the USSR. And we've gone from that to a world where there are billionaires that live in all of those countries. They can instantly access the markets. And gold is, traded. It's a pretty much a 24-hour a day trading range, because you've got markets that open in Australia and Hong Kong, and so the price now is basically set by almost everybody on the planet, except for maybe North Korea and a couple of countries like that. So you have 10 times the number of people that can rush into this market and will one day, each with about 10 times the currency.
Yeah, absolutely. And I think also that there was a lot of buying in the 80s from the oil-rich nations, because they had huge quantities of surplus dollars. So this is a tradition that really started, I think, almost from the time of that bull market in the 70s and has gone on ever since.
Yes, yeah. It's just that, most people... I was talking with a group of people a couple of weeks ago, and I was telling them that I wrote the best-selling book on investing in precious metals. And the guy says, well, so what are you going to do now? Gold already peaked. It's in a bubble. So what are you going to do with the rest of your life, basically, is what he was saying. And then I asked him, do you study this? Do you study the currency supplies and what's going on? And no, this is the perception the public has. Gold peaked at 1900. It was in a bubble. They don't compare it to the growth of the currency supplies around the planet. And that's the only real, gold isn't just a commodity. It's money.
Yeah, absolutely. And I think that bringing out your point a little bit further, really, people, I think, look at it upside down. What they should be looking at is the loss of purchasing power of the paper, rather than a change in the price of gold itself, because gold still buys what it used to buy.
Well, actually, people say that gold preserves purchasing power, and it does, except it bounces up and down in a range of purchasing power. There are periods of time when gold doesn't buy enough stuff, and then there are periods of time where it buys too much stuff, like January of 1980, when it hit 850 against a currency supply that was about 1/10 the size of what it is now in the United States. But throughout history, gold always does purchase something, but there is no time in 5,000 years that gold was as unloved and ignored as the year 2000. And there was no time in history where paper assets were more loved and overrated, basically, as in the year 1999, 2000, with the peak of the NASDAQ bubble and the dot-com stocks and so on. And so you've got this reversion from from 1971, this is the first time on the planet where gold is no nation's money. It isn't being used as money. And then from 1980 to 2000, it was in a brutal bear market. And by the year 2000, investors had just completely given up on it. Nobody wanted to hear about gold. When I first started trying to get people into gold back in when it was $300, $400, $500 an ounce, I couldn't. It was really difficult. I'd say, you got to buy gold. And they'd say, gold is the worst investment you could possibly make. It's been going down for 20 years. And I go, exactly. It's been going down for 20 years.
Yes, but it's still difficult today, isn't it, Mike? I mean, when I talk to people about gold, they think, some of the phrases you've used, it's in a bubble. And isn't it just a sort of another commodity, which is actually completely useless? And, all this stuff gets trotted out. But I think I'm right in saying that portfolio exposure is as low as it's ever been in the West.
Yes, yeah, exactly. Nobody really owns it yet. You talk to somebody about gold and they'll show you their ring or their watch or some piece of jewelry and say they own gold.
Yeah, exactly. I think if we can just move on slightly from gold. I mean, how are you looking at silver? Because that's sort of a fairly hairy ride for people, but there's a sort of some people say that the right ratio is 16 ounces of silver to 1 of gold, and here we are at 50 or something, and therefore it's very underpriced, so it's being sat on and so on. What's your take on the silver price?
Well, personally, I own about 90% silver and 10% gold, weighted by the price of, the amount of investment measured in U.S. dollars. I am a true believer in silver being, for the first couple thousand years that gold and silver were money, their average rate over that time period was about 12 to 1. The Earth's crust, I guess, has about 17 times more silver than gold in it, but mineable supplies has been 12 to 1. And I believe that it's simply the free markets, the marketplace, doing the price discovery mechanism. If you dug up gold and silver throughout history and those two coins become money, it's just the marketplace trying to figure out the true values of these things. You're trying to get somebody to let go of a loaf of bread, and you're offering them a certain amount of something, and the marketplace tries to guess what the currency. Most people don't understand that the marketplace is always setting the value of the currency. It isn't the value of the things that the currency buys that's changing. It's the value of the currency that's changing. And so when there's several bidders trying to buy a house, and the high bid is accepted and the house gets sold, they just set the value of the currency, to purchase that thing. The thing doesn't change much over time. And so the first 2,000 years that gold and silver were money, this is the marketplace trying to figure out their value based on their rarity, how much of them was in circulation. It's the price discovery mechanism. And I believe that still works. And since there is actually more gold for investors to buy on the exchanges and so on than there is silver, once gold goes past a certain price point, a lot of the common man will consider it too expensive. That's what happened back in the late 70s. Gold went past $400 an ounce, and for the common man, it was just $35 an ounce just a few years earlier. So it goes past $400, and putting $400 into a single coin just seemed like a lot of like it was really expensive at the time, and the public changed their preference to silver. It wasn't the Hunt brothers trying to corner the market that caused silver to go to $50. It was really, I interviewed Jeff Christian of CPM Group, and they're one of the leading commodities analysts firms that specialize in the precious metals. And he said that the Hunt brothers added 50 to 75 cents per ounce to the price of silver at most.
Really?
I believe that. In fact, I wrote an article. There was going to be a chapter in my book about the Hunt brothers, but we just had to. When I wrote my book, I accidentally wrote an 800-page book, and so 9 chapters were cut out of it, and about half of every remaining chapter was cut out, and so the Hunt brothers was one of the things that had to go. But my determination, what I found out from looking at all the evidence, is that the Hunt brothers were actually the sacrificial lambs used to protect the dollar and cap the price of gold. The price of silver peaked at $50 and didn't go any further because the commodities exchange changed the rules. They went to liquidation orders only, which means you can only close out futures contracts. You can't open up new ones. That means there's no new buyers. Without new buyers, the price can't go up.
Yeah.
And so the government put a cap on the price of silver at $50 and basically said, until this rule is lifted, the price of silver can only go down. And on the commodities exchange, on the floor, there's these, they call them pits, but it's just a group of guys standing around in a circle, screaming at each other and giving hand signals.
Yeah.
And basically set the price of things, these people trading with each other. And the gold pit, I would imagine, is fairly close to the silver pit, but regardless, if it was on the opposite side of the room, news travels at the speed of light in these places. And I would imagine that all those gold traders said, I'm selling. And so there's a reason that gold stopped at the same time as silver, and it's because they capped the price of silver. And so the Hunt brothers were used as the sacrificial lambs, I believe, to keep gold from running away and saving and causing the U.S. dollar to fail back then.
Yeah, no, that is very interesting. I hadn't really made quite that connection. I certainly make the connection about the possible proximity of the pitches in an open outcry market. I do accept the point entirely that people running a gold book are probably also involved with those running a silver book, so that it's connected there. And there certainly is a common interest.
Yeah, I mean, a lot of traders, a lot of investors and so on hold both gold and silver. And silver gets capped, and what are they going to do with their gold? I think the gold traders are going, if they can do that to silver, we're next. And so gold peaked at 850 and then fell simply because the price of silver was capped due to a rule change.
Yep, no, that's interesting.
There was a trial afterwards, and there was a bunch of finger pointing, and the Hunt brothers lost most of their fortune. But that book is a very in-depth study. Were they actually trying to corner the market and manipulate the price? And nobody can actually build a solid case that says, yes, they did that and they're guilty. Bunker Hunt was actually afraid that the dollar was going to fail because for the first time in U.S. history, it was a fiat currency. And it had only been a few years, but he was pretty well convinced. There's another article online that you can look up that was in Playboy called the Circle K Cowboys, I believe it is. And it was written in Playboy, I think, in 1983 or 85. And it was all about the Hunt brothers. And it's a very interesting article.
Right. Can I just sort of come back briefly to the U.S. economy? I think we agree that things are looking extremely dangerous. The government, I guess, must be preying on some sort of economic recovery so that government tax revenues pick up and the problems sort of abate. What sort of probability towards that happening would you? I mean, do you think that's at all possible, Mike?
No. Throughout history, every time they've tried this silly stuff that they're doing with the currency supplies, it's led to disaster. It's always failed. There may be a very short-term bounce in the economy, but they are trying to milk a little bit more out of the near future at the complete expense of the far future. There's a disaster looming, and they're making it worse, and it's going to become known as the Bernanke bust. The market is ruthless and brutal when it comes to balancing things out. And there has been malinvestment and bubbles created everywhere through all of this fiat currency creation. And when the market forces cause things to try and go back into equilibrium, they're going to try that the free market doesn't work, and we've got to fix it.
Yes, indeed. I think that this line isn't the best of lines, I must say. But this has been fascinating, and I'm sure that our listeners would like to find out a bit more about what you do. Your website is www.goldsilver.com. Is that right?
Yeah.
And you also wrote a guide to investing in gold and silver, which presumably you can buy via Amazon or off your website.
Yeah, you can buy it actually most places in the world. It's in 10 languages now.
Oh, gosh, that's good. Oh, well, that's fantastic. Anyway, well, Mike, thank you very much indeed for that. And, we must do this again sometime.
Thank you.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.
$5 billion paper dollars, base
Absolutely.
And now they're going to print 85 billion, coming up. Right now it's 40 billion a month. But once Operation Twist ends at the end of the year here, January, it's going to step up to about 85 billion, according to the San Francisco Federal Reserve governor. And that works out to just over $1 trillion a year. So.
But the extraordinary thing, Mike, it looks to me as if $1 trillion is not going to be enough. I think the amount of money that's required to stop the whole thing falling over is now looking like 200 billion a month.
They can try and stop it from falling over, and they can print the currency until it's completely worthless.
Yeah. Well, what else are they doing? The importance of gold and silver. Tell me just a little bit about why you feel this is necessary.
Well, like I said, we're really an education company that funds the education, because we give away all of our educational materials, everything that we can research and find out and know about monetary history and the global economy. We share, and most of that goes out at no charge. And so we're an education company that funds itself by the sale of precious metals. But what we're trying to do, there is a very real danger that, one of the things I was saying before we started was that there is a...
sort of coming to the current situation, I mean, I find this really quite extraordinary, because all the major paper currencies are coming to a crisis at the same time.
Yeah.
In America, you have, money is just accelerating at a hyperbolic rate. That's the only way I can describe it.
Yeah, it's going to be $1 trillion a year, basically, and so every year they're going to print more currency than took 200 years to create.
Yes.
From the beginning of our country, the U.S., until the crisis of 2008. It took 200 years to go from no dollars in existence to 825.
The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alistair McLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alistair McLeod on behalf of Gold Money. And with me on the line, all the way from Santa Monica in California, I have Michael Maloney, who is of goldsilver.com. Welcome to the podcast, Mike.
It's great to be here.
Now, in the sort of little pre-chat I had, you expressed a huge interest in educating people about
the financial crisis headed straight towards us. There is no way of avoiding it. It will happen within this decade. And I said that very often when there is great monetary upheaval, there's great political change that goes along with it, and it's almost always for the worse. We were talking about the rise of Napoleon was due to a hyperinflation. There were two hyperinflations during the French Revolution. Nobody knew who Napoleon was. He distinguished himself by quelling some food riots in Paris that were the riots were direct response to this hyperinflation.
And of course, and you also mentioned Hitler and so on. I mean, this is absolutely right. The two things go together, I think, like bread and butter, don't they?